When we pitched to Seedstars Mexico competition, it was just my co-founder and I. We doubled in size. Well, that's how I started my banking career, and I was just had the opportunity to actually manage a portfolio of financing companies, so large financing companies. Like back then it was like Volkswagen Leasing, Toyota Financial, but then I think I get bored easily, and that's one of the reasons that I recently became an entrepreneur. My co-founder, he lost his father when he was around 15, and he was forced to support his family through the family business, through running and growing the family business. And he later founded with his brother some other businesses, and so he's a serial entrepreneur, I guess.
Welcome to Seedstars Podcast. Seedstars is an organization that aims to have an impact in emerging markets by supporting the local entrepreneurs, investing in their ventures, but also sharing their story globally because we really believe they are the true heroes. We'll be listening to them and other thought leaders and disruptors that are really shaping the future of tomorrow, and we hope that together we can build a sustainable impact.
Hello, everyone. This is Adriana, who used to be on the investment team at Seedstars. Today, I'm extremely excited to have Roberto here with me, who will be representing Mexico as part of the Latin American team at the Global Summit, who is competing to be the global winner and for the investment. And I'm very excited to learn more about his fintech, Baubap.
Hi, Adriana. Thank you very much for having me here, for giving me this space to share with you and with the people interested a little bit more about what we are doing at Baubap.
Let's start off with where are you right now? So what does Baubap do and where do you stand?
Of course, we deliver a microfinancing service to underserved people in Mexico using a proprietary scoring technology. So technology we built ourselves to tend to our market, to the underserved market here in Mexico. We've been doing this for the past 15 months. So far, we have served over 225,000 users. We manage right now a loan book of a little over 20,000 loans. And well, we've been growing really fast for the last 6 months. I think we are past the validation phase for us. And now it's time to really start scaling and reach what I'm calling sustainable growth.
Before we then take a step back to understand how your founding story, your entrepreneurial journey, maybe to understand better where you are right now. You're 4 people, right?
Yes, we are 4 people. And it's crazy to me because we are serving a large customer base, and it just makes me wonder about technology, that 4 people are able to serve that many customers, you know?
And all of those 4 people are co-founders?
No, we are 2 co-founders and 2 people we have incorporated into the team. I think they are about to reach their 6-month anniversary.
Oh, so wonderful.
The first year, it was just my co-founder and I. Actually, when we pitched to Seedstars Mexico competition, it was just my co-founder and I.
So you've already come a long way.
We doubled in size.
Nice. And so you said you have a loan book of 20,000 loans. So what is the typical loan size that is taken out from you guys?
We lend between $25 to $250, and all of our new borrowers start at 25. And from there, they start developing their credit history with us. And some of them will receive amount increases during their lifetime within the portfolio. And today, the average size should be around $50.
So how does it actually work? Obviously, that's often an issue with microfinancing companies. Where does a credit score, if you want to refer to the American system, come from? How do people build a positive history? So how do you do that?
Of course, the way we deliver our service is through an Android application. And through this application, what we do is during the request process, we extract all the transactional data from a user's mobile device. And I'm talking about calls, SMS, calendar events, applications, geolocations, contacts, and some other subject areas. And we use this data to transform it into futures or indicators. And these indicators are then run through an ML algorithm. And this ML algorithm delivers us a prediction of repayment or a probability of default, depending on how you look at it, and using this non-financial data. So we combine this transactional data with the information provided by the user during the request, and we cross-match some information. We validate the user's identity using some techniques using this data, and then we make the prediction with the machine learning algorithms. So that's how we first started, discussing ideas on how we could assess credit risk for people who have no credit history, who have no banking transactions, cash-only income, which is in Mexico almost 60% of the economically active people. So it's a huge market. We sensed it was a huge opportunity. And that's how we first got started working on the idea of how to assess credit risk for these kind of people.
And what kind of markers do you use?
In terms of these transactions?
In terms of how you try to find out the risk of someone not paying back their loans, what is a marker that would tell you in an instant, okay, this would be a successfully repaid loan or not?
It's a huge amount of data, and each data point has a small correlation to a probability of default or repayment. So there are several factors making the decision. But I would say that what we do, even before the ML algorithm decision, what we do is try to establish if we can trust the information that is being provided by the user, So the way we do so is, for example, and a very simple example is, if you tell me your name is Roberto Salcedo, I will look for transactions confirming that you are actually Roberto Salcedo, So other contacts, SMS, emails, and I will look for these transactions to tell me that you are actually Roberto Salcedo, and this is actually Roberto Salcedo's phone. So what we do is first we establish if we can trust the information that's been provided by the user, because we will use this information also in the prediction. And afterwards, it's like I said, a large amount of futures looking for correlation, historic correlation. So we have trained our models with the data we have gathered since the very beginning. And this training has allowed us to reach a certain level of confidence we can have to the score, even when we are not using financial data.
So how many people do request a loan from you guys today, per month, for example?
Around 30,000 right now.
Wow.
It's a large amount. I am really amazed sometimes, because when we started, I remember I was disbursing the loans, and in the first 3 months, I think I was disbursing around 1 or 2 loans a day. Perhaps there were days that we didn't disburse any loans whatsoever. And right now we are delivering around 200 to 300 a day, to new borrowers.
That's very impressive. So I'm also interested, of the people who are first-time requester, How many of them will get a loan dispersed?
Oh, but very good question. It varies. It varies throughout time, and also in terms of how we want to manage cash flow. So historically, it's around 15%. So 15% of all the people who fulfill a request and deliver their data will get a loan. But we can go up to 35, we can go down to 5%, it depends. For example, amid this current situation, we are going, starting April, to go down to around 7%.
Yeah.
So that's a good way to manage risk and cash flow at the same time.
And what is currently your default rate?
Again, it's different between new borrowers and repeat borrowers. So new borrowers, we are happy with the results so far. Right now, our new borrowers cohort are delivering around 12% non-payment. And then it goes down to around 6% for repeat borrowers, So it goes way down. And actually, for most digital lenders, the business is in the recurrency, We want to achieve profitability from the very first payment, because we don't want to over indebt our customers. So we don't want to be forced to grant so many loans to one user, to one borrower, because that's what other people are doing in this market, because they are taking up to 5 loans to recover their costs, And right now we are actually breaking even in the first payment.
So what is your interest rate?
We charge an effective interest rate of 25%. And right now, all of our loans expire in 30 days.
So it doesn't matter what the amount is, they expire within 30 days, even the bigger ones?
Exactly. It doesn't matter. Right now, it doesn't matter. It's a standard. It's a very, very standard offer.
And so why are people taking out loans? Like, kind of, what are they doing with the money? What are some of the stories behind your user base?
This product is designed, back when we were thinking about this product, we were thinking about people with microeconomic activities, but mainly self-employed people, So like street vendors, taxi drivers, people who would have very small liquidity needs and very quick cash conversion activities, But right now the portfolio is around 40% people like this, people using it to finance a very small economic activity, and 60% is people with a formal employment and using it to complete their monthly income or to reach the next payday.
And what is a typical testimony story you like to tell?
Oh, one of the first stories we heard from a customer, and actually it's one of our oldest customers so far. I think she has received like 15 loans right now. It's in her 15th loan, and she's a street vendor. She sells tamales at Mexico City's downtown. And she first got to us because her daughter recommended her. And actually the reason she was looking for a small loan is that she had to stop her economic activity because her daughter got sick. So her daughter, being sick and at home, found out about us and asked her mother to request money from us so she could recover the setback she had with this emergency, and restart her economic activity. So it was, I think it was back then like $100 loan. Sorry, and that loan allowed her to restart selling tamales. So that's one of that was one of the first times that we were able to validate that what we were doing was actually helping people.
Yeah, I'm very excited to hear about your beginning. So let's take a step back and even further back, actually. So you actually have a background in banking, right?
Yeah.
So tell me a little bit about that. What have you been doing at HSBC?
Of course, we are all seniors. Well, I first, when I got out of college, my first job out of college was working at HSBC, and I was lucky enough to get into a development program they have in which you have to manage 3 or 4 projects during the course of a year, and one of these projects was in London in the headquarters, and so that allowed me to acquire.
Here, the goal was to onboard unbanked people onto HSBC.
Exactly. By delivering financial education.
So that was in 2008.
That was in 2008, 7, I think. That was, like I said, almost 13 years ago. And then I moved on within HSBC to become a corporate banker. So I manage a portfolio of large companies, large corporations. And well, that's how I started my banking career. And I was just had the opportunity to actually manage a portfolio of financing companies. So large financing companies, like back then it was like Volkswagen Leasing, Toyota Financial, the financing arm of Nissan, and companies like this who actually did personal financing. And that's how I learned how they were underwriting their loans, how they were making credit assessments, and I became proficient at it, I guess. And my banking career lasted almost 10 years, I guess. And it was fairly entertaining at the beginning, but then I think I get bored easily, and that's one of the reasons that I recently became an entrepreneur after a long corporate career.
So you then moved on to another bank before you joined or also co-founded your former startup, right?
No, the last company I worked for is a mid-market media conglomerate here in Mexico. Mm-hmm. And like you said, after HSBC, I moved on to a Mexican bank, also in corporate banking. And and then I got invited to become the CFO of this mid-market media conglomerate. And that was
Curiosity Media, right?
That was Curiosity Media, exactly. And it was a very extreme change for me because I came from large corporations, doing pretty much managing banking relationships with corporations through teams or through my teams, and then I got invited to become the CFO of this company, and I had to learn the business extremely quickly. And I also was very entertained by this new job, and at the beginning I had a very, very good time, and that's where I met my co-founder. Actually, we both were working for this company, and I invited him to join my team as an applications manager because I made the really poor decision of implementing Oracle ERP.
Good to know.
I'm going to become the advocate for not implementing Oracle ERPs. So I was having many problems stabilizing the solution, and my co-founder already worked for the company in developing apps, and I invited him to help me stabilize the ERP. And that's how we became friends. We became really close, and we became a team. And it was, I guess, one of the reasons that eventually we decided to take the bromance to the next level and co-found the company.
So tell me, how can I imagine it happened? You guys trying to somehow manage this oracle mess at the media company to co-founding a fintech startup. How did that happen? Like, I don't see the connection, right?
You would see it immediately if you get to know my co-founder, because I had always been curious about entrepreneurship, but it was something for the future to me, like an idea. Like, okay, one day I will become an entrepreneur. I will start my own business, but it was just an idea. And for my co-founder, it's just the way he lives. And actually, the anomaly in his career is working for me back then. Because he was forced, because he lost his father when he was around 15, and he was forced to support his family through the family business, through running and growing the family business. And he later founded with his brother some other businesses. And so he's a serial entrepreneur, I guess. And I think he just lacked the thing that I didn't, which was a bit of a structure, and just in order for looking to make a business huge, And I guess our profiles combined perfectly for this endeavor, or I thought so. And he's an extremely talented person, and really extremely hardworking. I've never met anyone more hardworking than him. He's actually our only developer to date. So you can imagine how much he works on a daily basis. And I think it was this feeling that he was the right person to go in business with, what propelled me to do this. And we started exploring some different ideas, but I felt I had an expertise for doing this, and he could provide the tech expertise. And that's how we chose this idea, this huge problem that I was really sensitive about. And we decided to tackle and take the leap and do it.
So how did that happen? Like, how did you find the way back to this issue where you first learned about, or you first worked on 13 years ago? And what made your co-founder also, jump the ship from the media company you were both working at? How did that all work?
Well, I was just really, I never lost touch with the financial inclusion problem. And I just felt amazed by how banks have been failing at this since I started my banking career. And so I just looked at the market and said, okay, there are almost no banks tending to this market. So even though they have been trying to do it for the last, at least to my knowledge, for the last 15 years, they haven't accomplished much in this space. So I was, like I said, really sensitive around this problem, and I sold the idea to him. Actually, since he ran his family business before joining this company, he was also sensitive to this lack of access to financing from people who have really small income, because his workers were always borrowing money from the family, asking to borrow money from the family, So he was also sensitive, and he got on board with the problem immediately. And then we started working on how to tackle it, how to assess risk. And we started to make some research and find some interesting things. And that's how we started to design the score, to design the value proposition, and to develop an overall vision.
How did you first validate your idea?
Actually, to me it's a very interesting story, because back then I felt really new to this whole startup concept. So I think I was moving really slowly. And unfortunately, my co-founder was a lot more in touch with this startup idea, with this lean startup idea, with the idea of validating before doing design, or putting in so much capital or so much effort, trying to validate by any way possible that what you are building is something people want. And so I think we took like 3 months to publish our first app in the Play Store. And this app didn't borrow any money whatsoever. It was just the application process, a very simple application process. It did extracted the information from the user's devices, but it didn't lend any money. We just wanted to validate that it was something people wanted, that it would generate demand, and the information actually would help us to finish up our credit score. And so we launched this app, and it had traction almost immediately. I think
How did you drive traffic through the app?
We used Facebook. I think we were spending like $2 a day, $2 a day in a Facebook campaign. And that produces in 3 months around 10,000 downloads, 10,000 applicants. 3 months later, we started disbursing loans. So that's how we validated that this service would have demand, because with $2 a day, we were able to attract 10,000 people. 10,000 people trusted us with their data. And so we thought to ourselves, okay, this is something people want. This is something that people are looking for, and let's put all the time and money it requires.
And so, with the data from these first 10,000 requested loans or customers, those were the data points you used to train your algorithm as well.
Exactly. The way it works for any artificial intelligence is that you first need samples, So you need real life samples in order for it to be able to actually learn something. So when we started disbursing loans, we couldn't use any machine learning algorithms because we didn't have samples. And so our first goal was to achieve a good enough sample size in order for us to deploy our first ML algorithms. So at the beginning, it was just a fraud prevention process, we were just validating the identity of the user. We tried to prevent defaulting transactions in the SMS, in the contacts, in the emails. So we read through this content in order to design this. We call them deal breakers.
Mm-hmm.
And that's pretty much what the score did back then. And I think we deployed our first actual machine learning algorithms like 6 months later. And actually, our first deployments were really not that good. We were just learning about them and how to set them up and how to best use them. We had to do a ton of feature engineering before it actually started delivering good results.
Is there actually a concern with data privacy?
Not much. I think people are not as sensitive to their data as they should be, and
I like how you put that. Yeah.
because people should be a lot more concerned of the data they are sharing with any company. Um, for example, I know how we are looking after this data. All the and how we use it, and we try to be as we try to keep a very high ethics standard in terms of how we use this data, how we read this data, and how we keep it protective and safe. But I see many people just sharing their info with companies that are not worth it. And
Yeah.
so I don't think it's a concern for most of our users, but actually it is something that we try to make them aware of. Through the application, we keep repeating them how we are going to use their data and how we are going to protect their data afterwards, how they can actually ask for their data to be deleted from our database and stuff like this.
I think you're really pointing towards a super important issue here. What do you think? Like, how can people know whether the institution, organization, service they're giving their data to is actually trustworthy? Like, what are red flags? What should people look out for?
That's a really hard question because even when companies are not looking for ways to behave unethically, they end up behaving unethically, just like Facebook and his Cambridge Analytica problem. I really have no good answer for that question. Because perhaps I share my personal data with companies that I shouldn't.
Yeah, I only imagine, I think it's really, really hard for people. If I remember, like, not only this Facebook thing, but there was recently, a few months ago, do you remember this app that will make your face go old?
Oh, yeah. Yeah, I remember.
Which, like, grabbed all your data, and people were not aware of it. Like, by the time the news about this were published, millions of people had downloaded the app and used it.
Yeah, it's very, very difficult to understand the risk of that you are incurring when sharing your data.
Yeah.
I guess a bad sign or a red flag is the number of pages in the data privacy policy.
You think where they want to hide stuff?
Yeah, if it's like 100 pages just as Facebook, you should be concerned.
And going back to your own history now. So what I'm also interested in, at what point of this development did you actually leave your former job?
Very early on, very, very early on, because, well, I had a huge amount of work and responsibility, or at least I felt I had a responsibility to the company I was working for. So I didn't dedicate any time to Baubap before leaving the company. And one thing we did, and I'm not sure if we should share it, but what the hell? I fired my co-founder like 3 months before I left the company.
How come?
Because the issues we were having with Oracle have settled down. So he had a lot less work to do, and we wanted to pursue this endeavor. So we discussed it, and I told him, okay, you are not dedicating this company's time to our endeavor, so go ahead, get a head start on this, and I will catch up with you. Just give me a couple of months. And I did leave the company 3 months later.
But you fired him first. That's hilarious.
That's the story. What can I say?
I'm surprised he trusted you.
He did. He did. Like I told you, our whole partnership was based on a bromance.
So what happened in the last 15 months? So the first 3 months you validated the business idea, and then you dispersed your first loan. Where did your first cash flow come from to actually disperse the loan?
I put some money into it. I think the first $25,000 I put them into it. That was the one virtue of my corporate career, is that it allowed me to make some savings. So I used part of my savings to fund the very first loan portfolio. And like I said, we started really slowly, because for us it was a validation process, and we didn't have the luxury of illimited resources and illimited capital. And I think that's one of the reasons that we have achieved the results we have achieved so far, because we became very efficient. We look after every penny just as if it was a matter of life or death. And we started really slowly. I think our first loan cohort was compound of 50 loans, and that was September 2018. Mm-hmm. And then we started growing at a steady pace, but in really small portions. I think our second cohort, which was October, was around 75 loans. And so we were not just looking to pay to see what happened, because we didn't have that much capital. But that allowed us to become very disciplined in the way we analyzed what happened with each cohort.
What were the insights you gained from these first cohorts?
I think it was a ton of each cohort delivered a ton of insights, starting from what transactions were more relevant than others. When we started, we thought the most important transactions we would analyze would be emails and SMS, because they provided the most content. And we started learning that it wasn't exactly that way, because our target market really is not a heavy user of either email or SMS, And so that's the first cohorts delivered that learning. They also delivered some fraud patterns to us. And for example,
what is the most important transaction for you?
The application itself.
But first-time users don't have the application itself, no?
No. When I say application, I mean the information they provide to us. Okay. So in order to get the loan, they have to fulfill a loan request. And this information, it's right now actually the most important information for the score, even for the machine learning part, Apps, it's extremely important, the way people interact with apps.
Can you give a concrete example here?
Yes, of course. There is a behavior, a very linear behavior in terms of how many financial related apps a user has, So the more financial related apps they have, the better they behave in their repayment. So for example, someone who has a couple of banks there, perhaps another digital lender or a wallet performs much better than someone who has no financial apps whatsoever.
Okay, so basically the hypothesis is, if you so want, more financial apps means higher financial literacy, means capable of managing money, means you will get your loan back.
Exactly. It talks about how proficient is the person in actually managing money,
Makes sense.
And some other show us that they are actually earning money,
Yeah. So what was the hardest thing you faced in these early days?
every day is a hard day when you're that early because the level of uncertainty is huge, and uncertainty brings stress and um, some other bad feelings, I guess. But
Mm-hmm.
something that really had a huge impact on us and the business, and a huge impact to date, is that I think after 4 months of disbursing loans, um, Google changed their data privacy policy,
Mm-hmm.
and asked us to remove our access to SMS and and call transactions from our app. And like I said at the beginning, we thought these transactions were the most important transactions for us to underwrite the loans, and we
Mm-hmm.
were forced to remove these permissions. And this was like 4 months into disbursing loans,
Yeah.
and and when we got the email from Google, it was heart crushing because we thought it would be a lethal blow. We
Mm-hmm.
thought it was the end for us, and we managed to become really creative and redesign our whole process. And we redesigned the app in a month, and we redesigned the evaluation process, the form, the information we ask from the user. And when we removed the permissions and launched the new app without this data, it actually delivered a better performing cohort than the last we had with the data, And
Nice.
so,
Good performance.
sorry,
Nice. Very good performance then.
a very, very surprising performance. We are really surprised because we were really, really creative. We set traps throughout the application form. Um,
Can you, I mean, I don't want to like take away anything of your secret sauce, but what kind of, if you can share, what kind of traps you have? Maybe you could share one.
I took a page from the psychometric exams. I changed the wording of different questions across the application, which is pretty much the same question, or we are looking for pretty much the same answer. And we look for consistency in these answers.
Mm-hmm.
And so that was one of the traps we put in. We ask our applicants to build their own credit history with us, through this form.
Mm-hmm.
And in that form, we set up these. Let's call them traps, just to catch if they are consistent in their answers. So it's a bit of a psychometric exam evaluation.
Yeah.
And eventually we actually got the permissions back. We persisted, we pushed Google because, like I said, for us, we thought it would kill us. And actually we became the only Mexican lender to have access to these permissions. And to date, we keep these permissions, and we kept our new form, our new request process.
Mm-hmm.
And it turned out to be something that benefited us in the long run.
So
But
when I hear what happened when when you received this information from Google, this email, when you read through it, how did you react? Now when you tell it, it sounds like you all turned it into a very positive thing, but I'm sure it was a huge shock when you first got the news. So how do you deal with information like this, with news like this?
for me, it's very important to really have your heart crushed quickly. And like I said, as soon as I read it, I could say that I almost cried because we had put so much effort. I had quit my job to do this, and for us, this information was extremely important. So just letting yourself feel the blow, it's important for me at least. So you really feel the blow and then move on quickly, you know? So it took a night for me because we received the news at night. It was a Friday night actually, and I was having dinner with some friends, and I just looked at my phone and read the email, and it ruined the rest of the night for me. But in the next morning, I knew we had to do something, you know. We would have to put up a fight. And the first reaction, of course, was looking for ways to keep the permissions, you know.
Yeah. And so what helps you to change between these mindsets? You know, the first mindset of being completely blown, shocked, devastated, anxious, whatever, into going into solution finding mode. Like, how do you switch?
Putting it to sleep, I guess, or a good night's sleep always helps me. I am fortunate enough to almost not have rough nights, even when I'm stressed. So, as I remember, for example, this very specific example is I just went to sleep, and when I woke up, my mindset was transformed. You know, I wasn't really feeling the pain or the setback. I just wanted to respond. You know, I just wanted to get working right away and look for ways to reduce the impact of this problem. So I don't know, turning off is important for me. So it gives me the possibility of rebooting myself and rebooting the way I'm feeling, I guess.
So when I first asked you what are what are the difficulties, you basically said every day is difficult. So now you're in like 15 months into your entrepreneurial journey, but now looking back at the very beginning or at specifically hard times that you faced, what is something that you know now that you wish you already knew back then?
The importance of validating the idea first before you actually put in the effort, the time, and the money. I didn't feel that important. It was that important back then, you know. I think we took 3 months in designing the first app, and I think we could have done that a lot faster. So that's one. The importance of validating that what you are building is something people actually want, and design is not important. Feeling good about the application or the look and feel is not important. The most important thing is just trying to validate that it is something people want, you know. So that's,
if I may jump on this, if you would have to do it all again from scratch, how would you now super quickly validate your idea? What would be the first test that you would design?
I wouldn't build an app for starters.
I like the way you're going. So how would you test your assumptions?
Especially for something as digital as what we do, it would have been something that we could have validated through just a landing page asking for people to provide their personal information to get a quick and small loan, with the promise that we were not going to check the credit bureau, and we will provide the loan in 15 minutes perhaps. That would allow us to validate that the idea had a demand for it, you know. But in the end, of course, because of our credit score, we would have to build the app. But I think it could have moved to a later stage, actually developing the app, because it took like 6 months of coding 3 months after I left my job, but I think it took my co-founder like 6 months of coding. And I think that's too long for a business that is just launching, you know?
Good thing you fired him.
Good thing I did. He's gonna kill me for this.
He hasn't killed you until now, so it can't be that bad.
But it was not because of bad performance, I swear.
So, testing quickly was the first thing you wanted to tell your younger self, if you so want, or your less experienced self. What would be the other thing?
And the other thing for me is that I made the mistake of looking for investment right away. Back when I think we didn't even have the app published, and I started looking for investors. Because I was, like I said, pretty new to the space, to the ecosystem, and I didn't know any VC funds. Come to think about it, perhaps I didn't know that VCs existed back then. So now I am lucky enough to know that they do exist, and they are not a myth. They do exist. Wasting time looking for investors back at that early stage for me was a mistake, but also on the other hand, it provided a first point of contact with them. And after some time or some months, they started to see some progress because we reached out to them very, very early on. But to me, it was a waste of time.
So what is your recommendation? What should a founder or a startup have in place when they go out and get in touch with investors?
In my experience, and I know there are some entrepreneurs who are able to raise money with a PowerPoint presentation, but in my point of view, I wouldn't dare to ask people for money if I am pre-revenue. Being pre-revenue, it's a huge risk for any investor, and I think it's something that actually makes you too comfortable at a very early stage. People who raise money with PowerPoints get too comfortable at the very beginning, to me it's a luxury you cannot have, being comfortable at the beginning. Because you lose this edge of feeling the need to survive. And feeling the need to survive, I think it's important for a technology-based company, And I see some entrepreneurs in Mexico that raised huge seed rounds before even writing one line of code, and 6 months later they haven't deployed any service whatsoever, and they hired 100 people. And to me, it's like, I'm not sure what they're doing. I think having access to capital really quickly puts you
it's not
in.
Always beneficial.
I think it's not that beneficial.
I agree. And as you said also in the beginning when you were talking about your company, is how it's taught you and your co-founder a lot, looking at every penny, whether you actually need to spend it or not. But now taking our view or our eyes into the future. So what's next for you, apart from the Seedstars journey and your next steps there? What's happening next for you?
As a fast scaling company, I think we need to think for the short term right now. We also need to have eyes on the long term, but we need to execute and plan for the short term. So for us right now, it's about handling these current crises and actually trying to thrive through these current crises. I think if we are able to keep the risk levels as they are right now and actually grow a little, it will show future investors that we are able to handle crisis, that we are resourceful, and that our business model is strong and will sustain not only the pass of time, but it will also sustain things we can't foresee. So for us right now, that's priority number one. Just thriving through this crisis. So perhaps for the following 3 or 6 months, that's our mindset. And we have to change our mindset because before this crisis, our whole mindset was around growing like crazy. We wanted to grow the whole business 20 times this year, and that's right now that's changed right now because of this crisis. So for the short term, we want to thrive through this crisis, and afterwards we need to be able to fundraise again and to diversify the source of funds we have so far, because we cannot rely only on raising equity in order to fund our loan portfolio. So in the short term, we want to diversify our sources of funding, and our long-term vision is to become a bridge to financial freedom for underserved people in emerging markets. And I like to talk about financial freedom in terms of people being able to control their financial lives, not relying on friends, on partners, on family to actually be able to control their economic lives themselves. And we want to develop new tools for around this idea, but for the next couple of years, we want to consolidate our position as a lender in Mexico. We want to reach 500,000 customers, active customers, and that would allow us not only to be profitable here in Mexico, but also to become relevant for the market itself. And after these couple of years, we want to expand to some other Latin American countries. What we do has a large cultural bias, and we think the fit would be better at the beginning for other Latin American markets for us to reach. So perhaps in 5 years, we are serving around 2 million customers across Latin America, and we are in Mexico and 3 additional countries. So that's pretty much our strategic plan for the next years, for the following years.
Nice. So actually, building on to the answer that you just gave, so we have prepared a few questions that we ask every entrepreneur that we talk to. And so now, coming to the end of the interview, I'd like to ask this question. And the first one actually builds very much on what you just said. And it is, what impact do you intend to have?
This vision of becoming the bridge to financial freedom is actually about impacting people's lives for the better, allowing people who has no solutions right now to manage their economic lives to reach solutions designed specifically for them, not designed for the middle class, not designed for the people in wealth management, but people who actually are understanding the troubles they face on a daily basis. So that's pretty much the impact we want to have on people who right now lack access to not only financing, but other financial services to help them manage their economic lives.
And how many jobs have you created until now, or did you help to create?
Well, directly, we have 4 employees right now. Indirectly, I hope we had helped at least 40% of our borrowers to keep at their economic activities, to sustain their economic activities. So that should mean that at least we have helped keep around 8,000 jobs.
So you referred a couple of times to all the things that you have learned on the journey. So can you refer a book, a podcast, or a documentary?
To me, it's important not to be one-track minded. So I try to, that would be my first advice to other entrepreneurs and actually other people in general. I try not to be one-track minded. And for example, in terms of what I read. So of course I had to read through the basics for entrepreneurs, like the Lean Startup, like Who, like principles from Ray Dalio and stuff like this, as a requisite to what I do on a daily basis. But if I can recommend something, or I can give a piece of advice in terms of books or content, is try to read content besides what you are doing on a daily basis, because I find for myself that my most creative time is when I read something entirely different from what I do on a daily basis. And one book I would recommend in those terms is Educated by Tara Westover.
Oh my God. Tara Westover? Yes, I didn't read it. I swallowed it up. It's so good.
I think I swallowed it up as well. I read it in a couple of nights.
So everyone who hasn't read it, who's listening, it's an autobiography of someone growing up in the US in the family of very strongly religious people that are also very mistrusting against the state. And yeah, they only rely on themselves. And she somehow manages to some extent to escape that life. But yeah, for me, what was most shocking is that she's basically my age. And like in the beginning, when I read it, I was like, it sounds like she was born 200-400 years ago, but she was born, I think, in 88 or 87 or something like that.
Yeah, it is. She's very young. For me, it was just such a distant problem to my life, and for her to be able to make it reliable to me through her story, it was really impressive. It's an amazing book, and it gives you, like I said, the possibility to relate to someone with who has faced problems very different to what most of us have faced, and be able to thrive afterwards. A really amazing book.
Well, is there any other book that you could recommend? I'm
reading right now the Genghis Khan, The Making of the Modern World, and I think it was Amazon's algorithm who recommended to me, and and I'm finding it very, very useful for modern business tactics. So I would also recommend you guys take a look to it.
Okay, so it's The Making of the Modern World and Educated.
And Educated, yeah.
Then my next question is going back to your business. What are your company's values?
It is something that my co-founder and I discussed very early on, because we wanted to base the company's values in our shared values. So I would say one thing that it's very important for us is something we call be rewarding. In our culture, in the Mexican culture, it's a punishment-based culture, and we want to become a company that rewards behavior instead of punishing, not only to our employees, but also in terms of our customers and the vision, how we nurture our vision through this value. So be rewarding is one very important value, and being trustworthy as well, being reliable, and for us, also execution is an extremely important value. For us, execution is almost everything.
Execution was also mentioned by, in case you're interested, by Martin Mejia, the head of RappiPay. He also said execution, absolute key.
Execution is almost everything.
So moving on to the second to last question, what would be a word, a phrase, a quote that describes you?
since I first came up with this, or not came up, just came across this couple of quotes, I wouldn't say they describe me, but it is something that I like to think I aspire to, you know. And one is from Goethe, and it says, it's from Faustus, and it says, like, treat people as if they were what they ought to be, and you help them to become what they are capable of being. And the other is a Chinese proverb that I like, that says, I see and I hear and I forget, I see and I remember, and I do and I understand, you know. So those phrases, I think I feel really identified with.
You are our hero. Who is a hero of yours?
I'm a sports enthusiast, so I can't help it. I can't help it. I love success in sports because for me, it's all about discipline and doing the hard work before actually achieving success. You know, you cannot expect to put on a uniform and get to the field and become the best at what you do. You have to actually put in the work first. So I really look up to many sports people. So Michael Jordan, I grew up with Michael Jordan. Of course, Lionel Messi, Roger Federer, the great ones in terms of sports. So I really look up to these people. And I also look up to people who dedicate their lives to think, you know, because as much as I like to talk about the execution and the importance of execution, I admire people who dedicate their lives just to think, because other people execute, other people feel compelled or feel obliged to execute, to deliver, and some people just feel the need to think about life and provide a different perspective. So I admire the Greek philosophers, the German philosophers. So that's pretty much people I look up.
Yeah, you definitely need to balance.
You do. You definitely do.
So, Roberto, thank you so much for taking the time to talk to me, and not only talk about your journey of building a fintech startup, but also everything around it, how you fired your co-founder before you founded a startup together with him, and many other things. Thank you so much for your time.
No, thank you. You're welcome. And thank you for the space, for this opportunity. And I hope we made some entertaining content for.
Thank you for listening to our hero's journey, and subscribe now for more stories on Seedstars Podcast.